financial system.
Okay, right. Rahul, so how does Singapore then fit into Ripple's global operations?
Singapore's location makes it a prominent gateway to emerging markets in Southeast Asia, as well as developed markets across the Asia-Pacific region. We're a global business, and we remain hyper-focused on building our teams outside of the US. About 90% of our business is global, and Singapore, and to a large degree, the broader APAC region, is one of our fastest growing regions and remains high on our list for recruiting.
You know, at the start of the year, there was speculation that Ripple's case with the US SEC will be settled by mid-year. Well, we're here now. Can you give us an update on how the legal case is unfolding?
We continue to push for a speedy resolution, and we look forward to proving that Ripple did not violate securities law and that the SEC never provided Ripple with fair notice that its actions would ever be prohibited under the law. The decision and timing is ultimately up to the judge. We don't have any control over that.
Okay, lastly, Rahul, I got to ask you about this. Ripple acquired digital assets custody firm Metaco for $250 million. It's $250 million US in mid-May. Can you give us an update on how that integration is going and how does it fit into the global strategy for Ripple?
So acquiring Metaco makes Ripple the leading enterprise solution provider in the space. Both Metaco and Ripple share strong, digital asset and crypto DNA. So this is the first of many offerings as we continue to build and invest in crypto infrastructure.
All right, Rahul, thank you so much for joining us on the show. Really appreciate it. All right, everyone, time for a quick break, but we will check in on cryptocurrencies and the NFT markets when we come back. Stay with us.
Forecast News is your gateway to all things blockchain, breaking down and breaking through the noise, the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forecast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forecast has it covered. This is Forecast News.
All right, welcome back to Forecast IQ. I'm Forecast Editor-in-Chief and your host, Angie Lau. It's good to be with you, and thanks for joining us. It has been an interesting week for crypto. We saw Bitcoin hitting levels not seen in over a year, even as ETH, the largest altcoin, gave up about 4% in the last 7 days as institutional interest racks up. So how are market experts playing this out right now? We've got Justin Dathan, Head of Business Development at KeyRock, and he's here to talk about just that. Justin, it's great to see you.
Hey Angie, thanks for having me on.
All right, let's kick off with Bitcoin ETFs. The first leverage Bitcoin futures ETF, as we said, just started trading this week. What is it exactly? How are futures ETFs different from spot Bitcoin ETFs?
I have a very negative view when it comes to futures ETFs. I think they're very inefficient instruments because there's a lot of infrastructure and cost required to buy, hold, and roll over futures, whether they're done on a monthly or quarterly basis. And so it almost means that by definition, you're going to underperform the price of the underlying. That doesn't require those costs. But of course, the whole point of an ETF is how accessible it is to institutional investors, professional investors, and also just retail if they have access through an app or a platform or a broker, right? When you talk about spot ETFs, they're a lot more complex because there are security concerns, regulatory and compliance concerns that the regulators, at least in the US and in many actually jurisdictions, can't really wrap their heads around. And that's why it's so hard to get a spot Bitcoin ETF.
Yeah, it's interesting to see how institutional players remain pretty optimistic about Bitcoin ETFs, as we've seen with BlackRock and Invesco and WisdomTree, and of course now Fidelity, even as retail investors are still slightly wary. What are these institutions seeing that maybe the average retail investor isn't yet?
I don't necessarily think it's a difference between a perspective on the asset class or the space itself, between retail and institutional investors. I think they just go about the space in a very different way. When you're an institution, you're going after an infrastructure or a product that caters to that market and to investors.
All right, Justin, let's shift away from ETFs. Let's take a look at the markets right now. I really want to talk to you about this. Bitcoin sitting around the $30,000 mark, even though a lot of people predicted that it would be between 25 to 30K for a little while longer. So what's your take?
Sure. So Bitcoin has performed very well in the past 7 days on the back of all the positive news we've had. We might keep on going up if people are still enthusiastic about it and if the macro environment itself remains positive, but things change very quickly in crypto in general, right? So I think it's too soon to say fundamentals are all rosy and positive and we should all be buying Bitcoin. But right now, at least, fundamentals are definitely very positive, and so there's no reason why Bitcoin couldn't stay or even go higher than 30K.
Justin, always a pleasure speaking to you. Really appreciate it. Thanks for joining us. All right, over to the world of non-fungible tokens, NFTs, as you know them by. Bitcoin Ordinals protocol has emerged as quite the fierce competitor to Ethereum NFTs in June. 4 out of the top 5 NFT collectible sales in the last 30 days were on the Bitcoin chain. And as you know, we track BTC Ordinals on cryptoslam.io. Let's get in our very own Yehuda Pesher to break down that nitty-gritty of the NFT market. Yehuda?
Sentiment across the NFT ecosystem continues to be positive as traders' optimism is stoked by bullish crypto news. A majority of NFT trading happens over on Ethereum, where the price of Ether is threatened across the 2K mark. So why am I mentioning crypto? Well, NFTs and crypto are closely tied, but you won't typically see them run together. When crypto is running up or down, NFTs typically stagnate, and that's because the price of crypto affects the price of NFTs pretty significantly. On the flip side, buying an NFT whose price could drop the moment you buy it, well, that's not ideal either. So buyers are also sitting out. Established Ethereum projects, collections like Moonbirds, CloneX, and Doodles have fallen to all-time low points, but even still, NFT traders are feeling optimistic. That's largely because of the art scene and because of some exciting announcements and some of NFT's biggest projects. Azuki's Follow the Rabbit event in Las Vegas last Friday saw the project's founder Zagabond deliver another check your wallet moment. And this year's announcement delivered them NFTs from another new collection called Elementals. The impact of the announcement saw a decrease in Azuki's floor price, but the following days saw Azuki's average sale price increase to one of its highest points since March, when it reached $46,000. The new Elemental collection will likely have an impact on the Forecast 500 NFT index because collectors may want to liquidate existing assets they hold across other collections to get a stake in this new Azuki collection. Plenty of others are having a very rough stretch. That's including the Bored Ape Yacht Club, who continues to see falling prices as the narrative across the NFT community focuses on the collection's falling floor prices. It reached as low as 33 ETH. Large Bored Ape holders like Machi Big Brother and Franklin together have sold over 60 Bored Apes. Other whales are taking their mid-tier apes and they're listing them at the floor, and that's leading to savvy traders scooping them up and quickly flipping them for profits. The discounted price has also led to a new anonymous wallet going on a shopping spree. Some exciting news has taken place over in the gaming world. Gods Unchained arrived on the Epic Game Store last week, bringing the NFT-based hard game to a huge new audience. Though to say it's a new game isn't entirely accurate, Gods Unchained is actually one of the blockchain's oldest video games, being born on Ethereum in 2018 before migrating to its current home on Immutable X. That's for scaling purposes and seems a very wise move at this point. Mythos Chain's NFL Rivals also made new this week as the free-to-play, officially licensed NFL mobile game crossed the 1 million download mark. Just as noteworthy is players are averaging 2-hour-long play sessions. These are all remarkable achievements considering it's the NFL offseason, so we'll see how this ecosystem grows once the upcoming season kicks off in September. And a history lesson to close things out. So Yuga Labs is publishing a book on the historic CryptoPunks collection, and this book will detail collection's history as being one of the primary inspirations for almost everything you see in the NFT space today. The book will feature insight from some of the collection's most noteworthy collectors, including Beeple, Death Beef, and Snowfro, although there is backlash among the punks community from members who have been staples in the community and have helped grow the community for years now, who have so far been left out. That's a wrap. on the NFT markets. I'll see you again next week with another market update.
Always interesting in the world of NFTs. You'd appreciate that very much. Thank you for joining. All right, on that note, let's take a quick break right now. We're going to focus on how crypto is faring in the world's most populous country. We are talking about India. Don't go anywhere.
Forecast News is your gateway to all things blockchain. Breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forecast has it covered. This is Forecast News.
All right, welcome back to Forecast IQ. We're going to talk about crypto in India right now. It's been a rough spot for the better part of the past year. We've got regulatory changes, taxation, and market movements, and it's all impacted the crypto landscape in the South Asian country. Forecast Pradipta Mukherjee takes a closer look at where the industry stands today.
It's 100% speculative activity, and I would still hold the view that it should be prohibited.
The message from India's central bank is clear. Crypto is not welcome in the country. India's crypto story can be traced back to 2014, when the nation's first crypto exchange, Unocoin, was set up. As digital assets rose in popularity, Indian entrepreneurs spotted a new opportunity. And over the next few years, local cryptocurrency exchanges, CoinSwitch, CoinDCX and WazirX was set up. Matic Network, which later went on to become the Polygon blockchain, was created in Mumbai in 2017.
The building scene is still quite vibrant in India. Of course, there are certain, say, startups which have left, in the sense that they have now set up in some other jurisdictions. But still, majority of them still work and stay in India.
In 2021, India introduced the cryptocurrency bill. 2 years on, the bill has yet to become law. Anand Purushottam of Crypto Legal told Forecast, it is likely that we will see a new version of the bill this year, and the outcome will depend on India's discussion with the G20.
And a lot depends on the kind of deliberations that G20 member states are actually going through. So once we have some clarity on what members under G20 think about it, they are also likely to release a report soon, probably in 2-3 months. And that report of G20 is likely to, in my opinion, shape the kind of crypto bill that we'll see in India.
While digital assets were not officially banned, regulators were clamping down through enforcement. In the 2022 budget, India introduced a 30% flat tax on all crypto income and a 1% tax deducted at source, or TDS. This had an immediate impact. Crypto exchanges saw trading volumes drop as much as 90% from July last year, and over $3.5 billion of crypto trading moved to offshore crypto exchanges, according to one estimate. Earlier this year, India also expanded the scope of Prevention of Money Laundering Act, or PMLA, to include digital assets, which requires crypto exchanges to conduct due diligence and report suspicious transactions. India's Financial Crime Fighting Agency, the Enforcement Directorate, has been investigating at least 10 crypto exchanges for alleged money laundering and has seized over $115 million so far.
This taxation is kind of a regulatory tool that the government wanted to use to maintain a status quo. And this status quo becomes very important because, say if we look at the timelines, then tax was imposed last year in March, and that was the time when, though even now we don't have cryptocurrency specific law.
While India has been bearing down heavy on crypto, it sees value in the underlying blockchain technology. Speaking to Forecast, Raj Kapoor, founder of India Blockchain Alliance, said various industries are adopting the technology.
What we do promote is the adoption of the technology, that's blockchain, and the distributed ledger technologies, and everything which flows with it, that is the metaverse, the NFTs, the DeFi, and the Web3s, all that is coming inside now.
The South Asian powerhouse has also been working on developing its own CBDC called the e-rupee, which the central bank sees as a game changer.
CBDC is the future money. Large number of countries are working on CBDCs. Technology is becoming more and more robust in this area. We cannot be left behind.
Countries' leading banks, including HDFC Bank, ICICI Bank, and Kotak Mahindra Bank, participated in a CBDC pilot launched late last year. The e-rupee trial tested both wholesale and retail payments. And just a few weeks ago, 6 Indian banks and JP Morgan launched a pilot to try real-time dollar settlements using JP Morgan's Onyx blockchain. India is also using its presidency of G20 to push for greater collective oversight on crypto assets and markets. Moreover, digital payments have taken the country by storm. Even street vendors proudly display QR codes for payments.
I don't think it's really a question of survival in the sense that, at least personally, I don't think the taxation regime that is applicable today will continue. And it's kind of a transitory provision where once the regulatory part is clear, then there will be a rationalization, and probably we'll see at least some form of tax benefits given to the ecosystem.
Future of the whole entire asset class is going to be tokenized. Today we have tokenized real estate, we have tokenized bonds, we have tokenized, we can tokenize green carbon credits, we can tokenize anything which is an asset. The next 5 to 10 years will see a major paradigm shift from the way things are today to getting tokenized.
Could crypto then be the next step in the country's fintech journey? Will we see clearer regulations and a well-defined crypto ecosystem develop in India? Or will crypto firms be pushed further into the shadows? Well, we will surely keep a watch. In Kolkata, India, I am Pradipta Mukherjee.
Well, that's a wrap on this week's show. It's always great to be with you. Remember to like and subscribe to this video if you're watching us online. It helps us get to you and get all of those insights to you better. Or stay tuned right here on this channel if you're watching from home, the office, or really wherever you are. We really appreciate the time that you've spent with us. It's easy to stay connected with Forecast for the latest developments in the world of crypto and Web3. I'm Forecast Editor-in-Chief and your host, Angie Lau. Join us again this time next week as we bring you the latest from the world of Web3 and why it all matters. Forecast.q. Get intelligent in Web3.
Good morning, happy Friday, and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm your host, Jen Sanasi. My co-hosts, Lawrence Lewitton and Emily Parker, are off today. And so Myself and the amazing technical team behind me are the only suckers working this long weekend, but we have a great show for you. Let's take a look at what's going on in the markets this morning, starting with Bitcoin. The Bitcoin price XBX index is at $31,003. Going up again after some Fidelity news when it comes to Bitcoin ETFs. We'll talk about that in just a little bit. Let's see what's happening in Ether. The CoinDesk Ether price ETX index is at 1,907, up over 2%, following the same trend as Bitcoin this morning. Let's see if DeFi assets are following suit. The DFX CoinDesk's DeFi index is at 112, up almost 7% this morning. All right, let's talk about that Fidelity news that is moving markets this morning. Fidelity has filed paperwork for its Wise Origin Bitcoin Trust, joining the wave of spot Bitcoin ETF applications after BlackRock, Invesco, and WisdomTree. Joining us now to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's State of Crypto newsletter. Good morning, Nick.
Good morning. Happy Friday.
Happy Friday. All right. We're gearing up for the long weekend, and we have another Bitcoin ETF filing. This is Fidelity's first application since it was rejected in January 2022, right after the SEC said no to Bitcoin ETF applications from First Trust and Skybridge Capital. What happened then? What are they doing now? Why is now the time for this flurry of applications?
To answer your last question first, honestly, I think now's the time because BlackRock did it. And I think everyone's got this assumption that BlackRock has a pretty good record, right? It's had exactly one ETF rejected out of nearly 600, I believe. So, it seems to be the idea is, well, if BlackRock's doing it, clearly they think that there's some compelling reason. But what's really interesting to me is we haven't seen much change in terms of the actual underlying Bitcoin spot markets that might warrant change, right? So if you look at all the SEC rejections from years past, and there have been some pretty lengthy, explanations of why they rejected some of these spot Bitcoin ETF applications, and they come down to a lack of surveillance sharing agreements with markets of significant size. So basically, the SEC is saying that there's no spot Bitcoin market that is regulated enough, that is, secure enough that it can prevent market manipulation or other issues from occurring on, the overall market. So I'm really curious to see what's changed, because that hasn't changed. There's no, spot Bitcoin market that's regulated by the SEC at this point, or even the CFTC, that screams, okay, well, this is definitely what the regulator is looking for a Bitcoin ETF application.
Could there be something in this surveillance sharing? So recently we saw Cathie Wood's ARK Invest amend their spot Bitcoin ETF to include the service sharing agreement. This is similar to the language used in the BlackRock filing. Is there something there maybe?
Yeah, that definitely addresses one of the SEC's big complaints, that they haven't had the surveillance sharing agreements in the past, or if they have, that the markets that they've set them up with weren't significant or regulated enough to satisfy the SEC's concerns. So that definitely seems to be what these companies are saying they've solved. BlackRock, Fidelity, even as you mentioned, Cathie Wood's company. They all seem to think, okay, well, we figured out how to set up this kind of surveillance sharing agreement with a market that should meet the SEC's needs or demands. But again, that I'm really curious to see what markets they choose, because at least as of today, June 30th, 2023. We haven't seen any of these markets really come into place. Now, the one thing that might be the case is these companies might be thinking, okay, well, the SEC started to bring lawsuits against crypto exchanges. Perhaps there will be a more regulated spot market by the time they get to the end of the review period, which could be as long as 240 days from whenever the SEC first acknowledges them. So that might be what they're anticipating, and this is just kind of a first swing at something they expect to see in place in the next couple of months.
I think it's important you bring up that more than 200 days number. This isn't something that's going to happen tomorrow. There's a process here. And as we saw on that graphic that was flashing on the screen just a moment ago, there have been 30 tries so far, according to some data. Talk to me about the next steps in the application process. What can we expect?
So the thing we're looking for right now is the SEC's formal acknowledgement that it is reviewing these applications. That's going to kick off the first 45-day review period, at which point the SEC will have the option of extending or approving or disapproving the application. My guess is, and this is what the SEC has done with every single one of those applications before, is they will extend the review period to go through the full 240 days. But right now, all we've seen are the initial forms filed by the issuers, so by BlackRock and Fidelity. What we need to see is the SEC post on their website and on the Federal Register a document saying, okay, well, we have received this thing, we have begun looking at it. That could happen, soon. It could take a few weeks, but generally it follows pretty quickly from once the first form, the 19B4, is filed.
Any indication from your reporting from a regulatory perspective why there's so much excitement around this when these ETFs exist in places outside of the US? Like, is there just hype around this, or from a regulatory perspective, is there something here that we should be watching more closely?
Well, companies have been applying for Bitcoin ETFs for years now, and the argument has always been that if you have an ETF structure, it lets people gain access and exposure to Bitcoin without having to actually buy into Bitcoin. So if there's concerns about, for example, things like security, or for people who don't want to deal with their own wallet, or for, companies or, investors or, sophisticated investors who want some kind of security and assurance about what they're investing in, but don't want to, or can't deal with the actual Bitcoin market. In theory, this will provide them with access. Also, Bitcoin ETF should be, accessible by anyone, really, any kind of retail trader. So, show up in your TD Ameritrade account if you want to. So, basically, the security is one thing, and then the ease of access and accessibility is the other thing. A lot of people just really want to see whether or not there will be mainstream interest in Bitcoin through an ETF structure, where there might not be if they're stuck trying to buy Bitcoin on their own wallet and self-custody or trusted custodian or anything like that.
All right, Nick, we are going to leave it there. Thank you so much for joining us this morning, and I hope you have a great weekend.
And you.
That was CoinDesk Global Policy Regulation Managing Editor Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Joining us now to discuss the crypto market's reaction over the spot Bitcoin ETF race is the CEO of institutional DeFi asset management company Hashnote, Leo Mizuhara. Welcome, Leo.
Hi, Jennifer. Nice to meet you.
Nice to meet you too, and thanks for joining the show this morning. Now, I have to get your take on the Fidelity refiling. We just unpacked it a little bit with Nick, but what's your take on the ETF and the market's reaction?
Yeah, I think the refiling is super interesting. As you guys know, this is the second time Fidelity has filed, and being on the back of BlackRock, WisdomTree, ARK Invest, VanEck, I think this is really showing this demand for this product, and the market reaction is similar. It's showing that a ETF in this space would definitely support Bitcoin price. I think one thing that might be worth noting here is, to some extent, all of these institutional providers all applying for this ETF at the same time, almost acts as a challenge to the SEC's decision-making process here. Clearly, these are real investors. These are BlackRocks and the Fidelities of the world think this is a reasonable thing to have on the market. And clearly, many other regulators have also thought the same thing. There are Bitcoin ETFs in Canada, Europe, Brazil, Jersey. Like there's a lot of precedent for thinking that these are reasonable securities. And so I think this is it's interesting to see this wave of investor demand for this product that the SEC will have to come up with reasonable reasons to accept or deny.
I'd love to get your opinion on if you think that this is going to be accepted given the big names that have filed. Given what Nick Day just told us, not a lot has changed in the U.S. since the last filings were rejected by the SEC.
That's right. It's really hard to tell, actually. I have no information on this particular likelihood of these being accepted. However, as the market matures, I think the likelihood of one of these passing only increases. It almost starts to look unreasonable as players even as big as BlackRock are starting to file the same claims.
We've seen Bitcoin hold above 30K and hit 31K in the last 24 hours, as we saw at the top of the show. Do you think the market is going to sustain this as we get more clarity over these ETFs?
I actually do. I think that this upcoming, I think we're out of the lowest of the bear market. And I think this next wave, this next cycle is going to be really driven by institutional investors. At least that's my thesis. And this wave of ETF filings very much supports that thesis. And I think we'll continue to see more and more institutional adoption of Bitcoin first, but then eventually other cryptocurrencies, and eventually also more of the DeFi ecosystem.
Today, Bitcoin options contracts worth roughly $4.5 billion expired on the Deribit exchange, which controls over 85% of the global options activity. It's also the end of June. We're halfway through the year. What are your expectations for July?
I think July is going to be a relatively quiet month, although no months are ever quiet within crypto. But I expect a steady grind. I think we've seen a very consistent upward trend since March, and I'm looking to continue to see positive headlines and positive movement out of this ecosystem. There's a big conference happening in Paris mid-July, and generally speaking, conferences where people have shown new technologies and new products within the ecosystem have been very positive for the market.
And does your positive outlook pertain to Bitcoin and DeFi assets? I know you haven't been on the show every day this week, but Bitcoin has held steady. Our DeFi index has kind of been up and down. Both are positive this morning. Talk to me about those two elements of the markets. Do you see them moving in the same direction?
Yeah, Bitcoin has been outperforming because of the level of institutional involvement and this positive hype around the ETF, and I think that's very well deserved. Bitcoin is definitely going to be the biggest asset for a while in terms of institutional adoption and just general market knowledge, I think. I do think that it will also continue to prop up DeFi and the reasons for the public to use the DeFi ecosystem as well. In particular, I've been watching a lot of the altcoins have been hit over the last month or so, particularly after the SEC filings, but almost all of them have recovered at this point. And I think that's a very positive sign, despite there being not that much news around them. And so we're seeing people really support that ecosystem and understand that not all of them, even if they are deemed securities, not all of them are going to be not viable at that point.
All right, let's talk about this PCE data that came out just before the show started. The Federal Reserve's preferred inflation gauge came out. The PCE index increased 0.1% in May. What's your reaction to how inflation is impacting the wider crypto market?
Yeah, inflation and kind of the broader macro ecosystem in general is very impactful, particularly for Bitcoin. I think we've started to see it we've started to see it diverge a little bit from the general macro, given the positive news. However, it is going to be a risk-on asset for a while now. So I think seeing tame inflation is always going to be positive. We've seen inflation come down pretty strongly over the last year, back down to really within range of what the Fed's going to be comfortable with. So the Fed being on pause and inflation no longer really looking like a threat is going to be only positive for crypto in general.
Now, I've asked almost all of our markets guests this week, but economists are calling for a recession either by the end of this year or by Q1 next year. How do you think this is going to impact the crypto markets, if you think it will at all?
Well, a recession is never good for any risk asset, right? But easier money, if the Fed starts to cut, will certainly be good for both crypto and the tech ecosystem. I also am not certain, though, on some of these calls for a recession. Many of them are predicated on this gut reaction of higher rates means recession coming soon. And I don't think that's the right conditionality, although there is definitely some correlation there. We are seeing a very strong market, a very strong economy, despite the fact that rates are high. The fact that we see this low inflation and low unemployment regime, even now with rates at 5% plus, I think it's hard to say that we're going to get a recession that quickly with such a strong economy going on.
All right. And lastly, back in February, Hashnote was the first company to be launched by Web3 incubator Cumberland Labs. Hashnote is also regulated in the US by the CFTC. Where do you see the future of institutional grade decentralized finance headed?
Well, I think generally, historically, finance has been very good at ingesting new technologies. And DeFi and this whole crypto blockchain thing is going to be no different. We're seeing adoption from many of the major financial firms in a variety of ways. We've recently seen a resurgence of money market funds on chain, particularly from Franklin Templeton and the like. We see experimentations from guys like Goldman Sachs and JP Morgan all the time. And so I think it's only a matter of time before we ingest all this technology and make a new financial system that's really driven by blockchain technology. And that's what we're doing at Hashnote. We think that because the future of finance is going to be driven by blockchain, having an investment manager that is blockchain first really is going to be an advantage as more and more of these assets go on chain. I think it's as inevitable as the electronification of equities markets, for example, which may have looked crazy to people in the 80s, but now we can imagine a financial market that's not fully electronified and traded on the internet.
Anything that you think needs to change with regulation to achieve this future you just described?
Oh, almost certainly. Right. That's the one thing that everyone is terrified about, particularly in the U.S. It's really a shame to see so much of the talent going abroad, as many of the other jurisdictions are actually quite positive on blockchain technology and crypto. We're seeing a lot of positive developments in Europe post-MiCA. Hong Kong is trying hard to attract talent at this point with their new regulation, and the Middle East is very positive and very proactive in trying to attract crypto talent as well as crypto money. So I am quite optimistic still about the U.S. being able to change course. I think we have a history of making great last-minute decisions, and so we're awaiting that as we set up shop and are expecting the U.S. to eventually make the right decisions, and perhaps do so in a very cautious manner. But with the type of money at stake, I think caution is a perfectly reasonable way to enter this market.
All right, Leo, we're going to have to leave it there. Thanks so much for joining the show this morning, and have a great weekend.
Thank you very much, Jennifer. You have a good weekend too.
That was
Thank you very much, Jennifer. You have a good weekend too.
That was Hashnote CEO Leo Mizuhara. We're going to take a short break, and when we come back, new details are out surrounding FTX's. We're going to take a short break, and
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Could FTX come back to life? The infamous crypto exchange is talking to investors about a relaunch. This is according to a report from the Wall Street Journal. Joining now to discuss is 507 Capital Managing Partner Thomas Brazil. Welcome to the show, Thomas.
Hey, thanks for having me.
Thanks for being here. Now, according to this Wall Street Journal report, current FTX CEO John Ray said the company, quote, has begun the process of soliciting interested parties to the reboot of the FTX.com exchange. Talk to me about what you think about this as an FTX creditor yourself.
Yeah, I think it's good to see them following all possibilities for recoveries, whether that's through litigation and, the regular sort of what are called preferences and fraudulent transfers and as well as marshaling assets. But then, going concern value is always more than liquidation value. So it's good to see them at least entertain the idea, even though I do still think that it would be a bit of a tall order for them to do. It's good to see this exercise happening.
Okay, you say it will be a little bit of a tall order. What do you think is the likelihood that something like this comes to fruition?
Well, it's looking increasingly more likely. So the probability is up over the course of the bankruptcy. But I would say it's still probably below 50% probability. If you really made me put a number, I'd probably say maybe a 20 to 30% chance. I think what the debtor is going to do is they're taking proposals from parties in the market who could actually run this business, and if that means equity in the the new company for creditors, that's fantastic. We would be supportive of anything that we think maximizes creditor recoveries. But if someone's just going to show up and run the estate and get free optionality on the back of creditors, we would not be in favor of that. So the details are very important.
I know I'm asking you to speculate a little bit here, but any inclination, any ideas who these investors might be, who these interested parties might be?
Yeah, I mean, it would be a who's who of crypto firms. I mean, I had heard the Figment floated around. I heard the Wave Financial guys name floated around from a few parties in the background. These are all guys that were looking to do things with, probably with Voyager and definitely with Celsius. So it's the same parties that are, you see it in every cycle. When you have downturns, or every industry, when you have downturns, and you're in a strong position, you look to consolidate and you look for business opportunities, and so it's not, it's anybody with cash and with the team to be able to potentially do this.
Yeah, I mean, everything we're talking about makes sense here. Do you think that the brand is able to revive itself?
Crypto has, I guess, crypto investors maybe have short memories. No, I think crypto has, I guess, crypto investors maybe have short memories. No, I think if it's confidently run with some capital put in by whoever the sort of plan sponsor is, in the same way that Celsius was run, their sort of plan is contemplated to be done, then we would be supportive, and I think that would be great for the estate. But yeah, again, it's still a lower probability. It's just for the estate to see it out. And I hope I answered your question there, but I rephrase it if I didn't.
No, that was perfect. We introduced you as an expert here. You started buying Mt. Gox bankruptcy claims back in 2015, and 507 Capital is a major buyer of claims like FTX, like we've spoken about, 3AC and Celsius. Talk to me about the marketplace for buying and selling claims like this.
Sure. So I just a tiny bit of context. I started getting involved in Mt. Gox, and we started buying claims and have been a major buyer of claims across almost every crypto insolvency, and not just claims, but we've looked at doing what are called debtor in possession loans and any sort of litigation finance or anything that might be interesting. So at the end of the day, we're in this ecosystem, and we're believers long term in the ecosystem, and that's why we've put a stake in the ground that we want to be a part of these restructurings. Because long term, the ecosystem has to grow for us to benefit. So yeah, the market in general, there's a pretty active market for FTX. I would say Celsius, there's a pretty active market. Voyager, not as much, and Three Arrows, not as much. And then there are a number of entry dockets that people don't probably talk about that really aren't so active. But it's good. The American process for bankruptcy is great because in FTX there is a lot of disclosure, and so that allows buyers to be able to really get under the hood and understand the process of what the recoveries might be long term, and therefore offer decent compensation to people. And it also helps the seller get comfortable that they're not being hoodwinked into selling. Like they feel like they know what's going on in the case. So,
I have to ask you, given your experience, about a new product that hit the market recently by 3AC founders Kyle Davies and Suzu. They launched OPNX. They're tokenizing bankruptcy claims. Do you think there's a future for a product like this?
I do. Not sure if it's the right team to be doing it, but I definitely think that the idea of tokenizing bankruptcy claims is super cool, much less incremental than the idea of maybe a marketplace. Not that there's anything wrong with a marketplace. The marketplace is fine too. I think that the idea of tokenizing bankruptcy claims is super cool, much less incremental than the idea of maybe a marketplace. Not that there's anything wrong with a marketplace. The marketplace is fine too. But I think innovation in the restructuring space is great. And it's nice, it's unfortunate for creditors that are caught up in it. But, let the competition begin for, creditor assets and eyeballs to be able to monetize their claim in any way they can.
Some might say that these two co-founders understand bankruptcy better maybe than the rest of us.
Yeah, I don't know. No comment. I don't know what to say to that. I wish them the best. I think it's great for creditors to have just more options. It can't hurt.
All right. I want to talk about something you tweeted yesterday. You tweeted a line item from John J. Ray's expense report. It shows the current FTX CEO is researching treasury investments and cash options. Explain what that means and why it matters.
Well, I guess if rates are at 5%, 5% on $4 billion or whatever, $3 billion, whatever the cash holdings are at this point, would be fantastic for the estate because it could help the administrative burn. But in the U.S. bankruptcy, and I'll say I'm not a lawyer, we invest in these. So I think I'm saying it right. When you're supposed to be an FDIC, insured accounts. So for him to basically go do treasury management, he'd have to motion for the court to get approval for whatever they were doing. But there is huge cash balances, and they are just sitting around. They should be invested in a conservative, but it wouldn't be wrong in a prudent but conservative way. I don't see why they wouldn't be looking at this. So it's nice to see. I think people have talked about it for a while on Twitter and other places. And look, I had the opportunity to meet John in person a few weeks back, and he was fantastically great and candid. And I think this is just more of John being John, which is trying his best. And I think this is just more of John being John, which is trying his best to increase recoveries for creditors.
Thomas, thank you very much for joining the show today, and I hope you have a great weekend.
You too. Thanks for having me. Y'all have a good weekend.
That was 507 Capital Managing Partner Thomas Brazil. We're going to take a short break, and when we come back, we'll reveal the top places in the world to live and work in crypto, blockchain, and Web3. Find out what those are when we come back. Good morning. Good morning. And welcome back to First Mover on CoinDesk TV. Zug, Singapore, and London ranked the highest in CoinDesk's crypto hubs list this year, which details the best places in the world to live and work in crypto. Joining us now to discuss how these rankings came to be is the CEO and co-founder of IOMob, Boyd Cohen. Welcome to the show, Boyd.
Thank you, Jen. Nice to be here.
Wonderful to have you on this Friday morning. Now, you consulted with CoinDesk to create these rankings. Talk to us about the methodology. What went into scoring and rating these cities?
It's always a tricky prospect. It's always going to be contentious, the results, and this was it's always going to be contentious, the results, and this was the first time we ever collaborated to build this, so it's going to be a learning process for all of us as we move on to future rankings. I actually, in the past, used to do smart cities rankings for Fast Company, and that's kind of how the conversation got started about collaborating. Worked with the team at CoinDesk over, I don't know, 6 months or so. And we applied. So I have a background in academics, although I've been working in crypto now for 6 years, and have actually visited or been to events at almost all of the top 15 in our list. So I have some context. We went through kind of a blended process that's somewhat academic and then very practical. In the end, you have to be a bit practical when you do a ranking like this, because there's so many different ways of capturing the data and using the data to actually try to come up with a credible ranking that people would actually, accept on its face as being a neutral, credible result. And in our case, what we did was stage one. We reached out to experts we knew globally, and we specifically sought out people in less obvious places too, so that we had a more holistic approach to this. And the first question was, name the top 20 cities in your opinion, or regions or hubs, because we define it as hubs. So the idea was, you never know. There are areas in the world where it's not just a city, but maybe a region or like a couple cities combined that are creating like the Silicon Valley for crypto, right? So we use that kind of process to get from subject matter experts a list of cities to start with, and then we look for out of the couple cities combined that are creating like the Silicon Valley for crypto, right? So we use that kind of process to get from subject matter experts a list of cities to start with, and then we looked for out of the 20 or so experts that we got good responses from, we looked at where there was overlap, as in this region or hub has been named by at least two of the experts we reached out to, and that formed the basis of the starting point for the ranking, followed by a collective exercise to choose the indicators that we should select, and then find data that was accessible and acceptable to represent those indicators we wanted to capture.
Okay, so definitely a thought out process in putting this list together. You said you visited all of the countries that
most of them.
Most of them. Any cities that you were surprised to see make the list?
Well, for sure. I mean, I think I barely knew anything about Ljubljana until we did this ranking, so that was one that surprised me. We had some that were maybe not surprising, but didn't make the final cut, that I was happy to see in the first list, but didn't make the final 15, like Lagos in Nigeria. Buenos Aires, El Salvador. Again, going to that point that I think, increasingly, and it's even interesting, some of your prior interviews today regarding sort of the regulatory environment, the approvals of ETFs in the US is kind of interesting to juxtapose. You've got the US market, which did, some people view the rankings as, well, the US did pretty well, because like 6 cities in the US made the top 15. But when you look at most rankings of cities for innovation, usually the US is dominant, right? And in here, I think the first city ended up, the US city was 8th. So every other cities from around the world before US cities appeared. And that is because of the regulatory environment. Whereas you find in some of these more developing countries in cities like Lagos, and others, you have a much more favorable environment. El Salvador, where they actually, of course, used Bitcoin as legal tender.
Talk to me a little bit more about how regulation played into the scoring here. We just saw a graphic that had the weights for the scorecard. How important was regulation when putting this list together?
Yeah, this was something we debated internally. I mean, obviously, any ranking, selecting indicators is already a challenge, and then deciding the weighting of those indicators is another challenge. And we had a lot of debates about it, but in the end, for us, it was just so critical. The regulatory regime, because without it, you really just don't have a solid foundation for a vibrant crypto ecosystem, whether you're a startup, whether you're a venture fund, whether you're a digital nomad. If you have a antagonistic relationship with the regulation bodies around crypto, it's really hard to have a flourishing crypto ecosystem. So, you could argue that it is surprising that there were even 6 cities from the US that made the list, or North America that made the list, given the frankly terrible regulatory environment you find in the US, compared with, and one of your previous guests just talked about it, Abu Dhabi, Dubai, Hong Kong, Singapore, so many cities and regions are really taking a leadership. London taking a leadership position on not really taking a leadership. London taking a leadership position on not saying we're going to regulate by enforcement, but we're actually going to embrace these kinds of initiatives, this kind of innovation around crypto, and we want to track the world's innovators around crypto. And there's that recent story with Andreessen launching an office in the big venture fund in London, and one of their biggest rationale was specifically the regulatory uncertainty in the US versus the certainty around it in the UK.
Wrap this up for us as we go into the weekend. What does this list of cities tell you about the state of crypto on an international stage?
What I actually kind of love about it compared to most traditional sort of innovation indices is how decentralized and democratized hubs of innovation around crypto are. I think if you looked at most tech industries, you would see more I think if you looked at most tech industries, you would see more bias exclusively in the Western world, particularly Europe and North America. And what I love about crypto is by default, by its design, is a democratizing technology, and therefore we're having these hubs emerge all the way down to Lagos, to El Salvador, and of course to Dubai and other markets. That's what kind of has me the most excited about the future, is that we're not like putting all our eggs in the basket of Silicon Valley, but instead seeing flourishing ecosystems all around the globe.
Boyd, thank you very much for joining the show this morning.
Thank you, Jen. My pleasure.
That was the CEO and co-founder of IOMob, Boyd Cohen. Head to Coindesk.com to check out the rest of the cities that made our crypto hubs list this year. That's it for First Mover. I'm Jen Sanasi. Thank you so much for coming and joining us this morning. It will be off for the weekend, but back on Monday. I know it's a long weekend for most, but we'll be back right here on July 3rd. In the meantime, you can catch the hash today at noon. You're watching CoinDesk TV.
Hey there, welcome to the Hash. It's me, Zach. I got Jen Sanasi, I got Adam Levine. We're on CoinDesk TV. That's pretty cool. CoinDesk Podcast Network, also super cool. Check it out. Good stuff. We're here to talk about today's news in crypto and more, and I'm going to kick it straight to Jen for the first story of the day. Jen, what do you got?
All right, we got some more developments with FTX. According to a report by the Wall Street Journal, FTX is moving ahead with plans to restart its international exchange. CEO John J. Ray III is quoted in the article saying that the company has, quote, begun the process of soliciting interested parties to the reboot of the FTX.com exchange. Sources say the company has already had early talks with investors about different structures, including possibly a joint venture. Adam, I'm going to kick this one off to you. Seems like FTX 2.0 could be on the horizon. What do you make of this?
Well, I think it makes sense just from the perspective of if you were going to try to get value out of this brand, then this would be the way to do it. FTX, although it had a pretty abrupt fall from grace, really was a top exchange for a good amount of time. necessarily for folks in the US. We weren't really allowed to use it, much to my chagrin at the time. But in hindsight, that turned out to be pretty all right. The reality, though, is that if they can reboot it, then there probably is substantial brand value to be had there. And that could wind up being a better way to recover, much of kind of the losses that appear to have been incurred here for folks who have funds trapped in there. It could also work out well for the company as well, because it likely would mean that not just kind of beyond the restarting, that there would be some type of equity allocation that would actually go to people who are owed money by the exchange. And so that could then allow the company to keep kind of more liquid capital and go from being something that just gets liquidated, down to nothing, to pay off what it can, to instead continuing as a going concern. Which would be better for some of the parties who are involved here. So I think that it makes sense. I think ultimately it'll be hard to pull off. There's a lot of challenges around trying to reboot this type of brand in this type of situation, but it makes sense that they would try. Zach?
Yeah, a lot of people who used FTX really liked the interface, right? They liked the UX, they liked the functionality. People were fans of it. Whatever was going on behind the scenes wasn't evident to them. The massive dumpster fire that apparently was FTX in Alameda wasn't apparent to a lot of users who really sang the praises of the trading interface at FTX. So the idea that they would kind of roll out that technology certainly makes sense. I think it shows some forward thinking by John J. Ray III. JJ Ray out here launching things despite maybe some initial skepticism that this would ever come to pass. I know we expressed a lot of that skepticism on this show previously. So if this ends up being the case, I mean, yeah, hats off to him for trying to get money back into the system and pay out people who were harmed by what appears to be, or what is alleged to be, a pretty massive fraud. So yeah, it's going to be interesting to see. I think the thing that I'm most interested in is which backers back FTX 2.0, which venture funds sign up, send their name on the line, put their name next to the FTX brand and say, you know what, we're doing it. We're going all in. There was some fans of this product in the past, and we think we can breathe some life into it in a way that makes sense. That to me is actually going to be interesting thing. No names were mentioned in the piece, but reportedly at least, JJ Ray is making the rounds and saying who wants to back this thing. I'm very curious to see who that ends up being. Jen?
Yeah, the piece said that parties that want to be involved must submit indication interest by the end of this week. So if you're watching and you want to be a part of this, you have until Friday. And the piece also said that Figure is allegedly interested in helping FTX restart You'll remember that they bid on the rights to Celsius. But lost to the consortium that won that bid. So interesting. I am also very curious to see who could get behind this, but it sounds like it's probably, Adam, to your point, one of the better ways to get funds back into the hands of customers, to give customers some kind of something that can make up for what's happened over the past year with FTX. I see Will Foxley has joined us. Will, what are your thoughts on the possibility of FTX 2.0? And welcome to the show.
Thank you. Thank you so much. I don't know what you guys just said, so I might just be repeating it, but that's...
And welcome to the show.
Thank you. Thank you so much. I don't know what you guys just said, so I might just be repeating it, but that's... It's okay. I'm going to still say it with enthusiasm. I think they should relaunch FTX 2.0. I hope they do go along with this. Why? Because there's a lot of creditors involved with this, and maybe everyone who's involved here can get some money back. We've seen all the other stories of failed exchanges, right? People get like 10 cents back on the dollar, 14 cents back on the dollar. Well, what if there's a world where FTX is able to reboot itself and pay back everyone the full amount of their money in USD terms? That's a pretty fantastic ending, though a very unlikely one. I know there's a lot of people on crypto Twitter who are pushing for FTX 2.0. They're like putting it in their bios. They're putting in like their handles saying like, we want this to occur. It's typically people who obviously lost a lot of money and are well down like the creditor stack and are unlikely to get money because all the money goes to people who had loans out to FTX or our lawyers working on the Chapter 11 case. So that's what I'm cheering for. I think there's a place for another exchange out there. Sort of like the Ledger news yesterday with the institutional trading firm that they're trying to boot up. There's a vacuum right now. After FTX left, a lot of liquidity left the market. A lot of people didn't know where to trade. Coinbase is under siege. Binance is under siege. I think it's prime time for another person to step up. And build an exchange that a lot of people can use. Did I repeat anyone's talking points? How was that?
That was highly value
supported our
coming in
points. Like,
blind. That was nice.
that was really good. It's professional. I will say that. I wonder how regulators are going to use the narrative. I know there will be probably no validity to saying something like, FTX failed customers. There was like massive wrongdoing behind the scenes, and here we are. FTX is back again. I can see regulators saying that. I can see them using this narrative to push regulation that maybe is not favorable to the industry. Not saying it has any validity to it, but I can see that happening. Separately, customers have until the end of September to submit bankruptcy claims. So I just wanted to get that September to submit bankruptcy claims. So I just wanted to get that in there. If you were a customer of FTX, you should be receiving a link to submit your bankruptcy claim, and you have until the end of September to do that. That is my public service announcement to the people.
Very nice.
Thank you, Jen. Okay, cool. Let's move on to our next story. So next up, publicly listed exchange Coinbase continues to battle allegations from the U.S. securities regulator, which has accused the company of exposing users to what the SEC alleges are unregistered securities. A security, whether registered or not, is essentially a contract with obligations laid out and defined in at least basic terms. And that is the crux of Coinbase's argument for why the terms. And that is the crux of Coinbase's argument for why the is wrong here. Quote, because no such obligations are carried in the transactions over Coinbase's secondary market exchange, and because the value that Coinbase purchasers receive through these transactions adheres to the thing bought and traded rather than in the business that generated them, the transactions are not securities transactions, end quote. This is a somewhat controversial take, just because, again, in the world of cryptocurrency, there's a lot of questions about what really is a security as it relates to that we test. Zach, I'm going to throw this one to you first. Kind of what's your read on this argument? Is this a strong argument for them?
I think it's a very interesting legal tack. I think what you laid out, right, is that tokens don't guarantee an ownership stake in the projects that ostensibly launch them, right? They exist, they do their thing. There's no public disclosure requirements in terms of how these alleged securities would disclose that information to investors. So Coinbase is saying, hey, this isn't what you think it is. It does not exist within the existing purview, and you've failed to establish clear rulemaking and instead have chosen enforcement. So that I think that's honestly the crux of the argument, and is an interesting argument. It's going to be an interesting one to advance through the courts and to see if judges are sympathetic to this argument and whether or not the U.S. securities regulators have done their due diligence in trying to establish a framework for what these other things will be regulated as. Gary Gensler obviously has maintained that just because it's a new technology doesn't mean it's not going to be covered by existing securities laws. And Coinbase here is saying, no, that entire premise is wrong and faulty, and how that's all going to get arbitrated in court is going to be really fascinating. But yeah, interesting to see this as the initial volley. Wouldn't have necessarily expected that this would have been the approach, but certainly it's a strong statement. That's what I'll say. Will, I'll toss it to you.
Yeah, I actually kind of disagree with Coinbase here. I think that some tokens that they list are not securities, but some of them do fall under the parameters of what a security would be, even if they use different language and wording. Let's take, for example, a governance token. There's a lot of governance tokens listed on Coinbase. Able to purchase them there. These governance tokens basically have one purpose, that is to govern the function of a DAO that controls the network. And these DAOs' purpose is to streamline the network, adopt more users, and generally increase the price of the token. It's like a classic flywheel for these things. And that's been well known for a lot of these projects. You need that. And I actually don't disagree that that's not a good use case for these tokens. I think a governance token can have a good place. But if it quacks like a duck, I think you sort of get the picture, right? Like there could be some problems here. Now, not all the tokens that are listed on Coinbase are that. I think some of them are like that. So I sort of take a different stance. I just think like the Howey test in general is like an old, outdated law and can be changed based on the fact that, things have changed, technology has changed, and there's probably a better way of enforcing regulations than what they're doing currently. The other thing I wanted to bring up was the Coinbase. Part of this Coinbase article was talking about how they don't like the enforcement actions that have been taken to date. Quote, for years, Coinbase has voluntarily submitted to regulation by multiple overlapping regulatory bodies, has adhered to public and limited formal guidance from the SEC, senior SEC staff, and the courts about the application of securities laws. to its industry. They're basically taking another stance within this argument, saying not only do we think the securities laws are wrong, but we've tried to listen to you guys, and you guys have not helped, and therefore this whole thing should be thrown out in the first place because you're going against your own guidance, which to me is like almost like a 1-2 punch, like coming at them, but also sort of helps them in the back case that, you know, whoever is the judge here disagrees with Coinbase on the securities point, but maybe we'll agree with them on the fact that the SEC has not been following through with their enforcement actions in like a healthy way. I'm going to throw it over to Jen.
Yeah, I think it's a good argument. And Will, to your point, I mean, there are all of these tokens that exist, and there is the theoretical use case for it, but then there's how people are actually using that token. And we need to take all of that information into consideration. I think this we need to take all of that information into consideration. I think what this highlights is there's the Howey test. It's been used in one way by the SEC for a really long time, but when applied to this industry, maybe there are aspects of the Howey test that are left up for interpretation, which then means the Howey test maybe is not the best tool to use if it can be left up to interpretation. And I think Coinbase's response to this shows just how it can be left to interpretation. Like, we're discussing it right now. We're taking different things away from how the Howey test is being applied to different tokens that Coinbase list, and I think that's a good thing to highlight. Zach? List, and I think that's a good thing to highlight. Zach?
I guess the big question, like as it relates to Howie, is are tokens the contract of the orange farm or are tokens the oranges, right? Are tokens an investment contract or are they just merely something that maybe was initially involved in what may have been an investment contract and therefore it doesn't necessarily sort of comport with like these existing structures, right? And there's a lot of fuzziness and a lot of questions around that. We've seen a big debate spring up over the launch of Prometheum, which got a special purpose broker dealer license to trade in digital asset securities, but has hasn't really offered much detail into how that would actually work in terms of the offered much detail into how that would actually work in terms of the investor protections and other things set forth by current regulations. So this conversation is really fascinating. For Coinbase to dig in this direction with their sort of initial statement, it's just going to make for some really interesting viewing, I think, in terms of investor protections and other things set forth by current regulations. So this conversation is really fascinating. For Coinbase to zig in this direction with their sort of initial statement, it's just going to make for some really interesting viewing, I think, in terms of this brewing SEC crackdown legal/regulatory fight that's obviously being played out on multiple fronts right now. So yeah, another fascinating move to see. I'll toss to Adam.
Yeah, I mean, I think we can
move to see. I'll toss to Adam.
Yeah, I mean, I think we can wrap up with I'm comfortable making a prediction here, which is to say that we're going to see this mess continue probably for another 1 or 2 years, and then I think Congress will eventually act in a way that sort of puts this to bed. I agree with the point that like Howie is the tool we have, not the tool that we need. and kind of the all of the deficiencies with that standard in kind of the modern era, close to 100 years later, I think about 90 years later at this point, like that's where the challenge comes into play here, is just that we're using a standard that was designed at a time before we understood a lot of stuff that's like on the basic science level, much less kind of the modern era of technology. And so this will eventually get solved. But in the meantime, it's kind of fertile ground for sort of these power games that these regulatory agencies play, where basically their own sort of self-aggrandizement and their importance to the current narrative. Like if the SEC wasn't focused on tokens right now and they weren't focused on cryptocurrencies, who would care about what they were doing? Who would think about cryptocurrencies? Who would care about what they were doing? Who would think about what they were doing? Why would they get more money to do any of the stuff that they're doing? They wouldn't. So this is doing. Why would they get more money to do any of the stuff that they're doing? They wouldn't. So this is actually, again, like there's some meaningful incentive in here for them to make the argument that, hey, this is all about us and you better fund us more, right? Give us some more power so that we can protect you from this, even if that's not really the fit. But the beat goes on.
And the beat goes on into the break. We're going to take a break, and then we're going to talk about some other stuff, including the MFers NFT collection at Lowe's. Can we even say that? MFers at Lowe's on a flag. That's kind of an interesting development in the world of NFTs. We'll talk about that with someone involved in the project and more on the flip side of this short break. Stick with us. It's The Hash.
And welcome back to The Hash. Are you a fan of lawn art and NFTs? Well, this segment is exactly for you. We're talking about MFers, which is a new project that integrated with Lowe's in order to put the MFers PFP on lawn art. Pretty interesting development here. We have Matt Varnell of Total Marketing Web3 joining us now to talk about it all. Matt, first of all, welcome to the show. And second of all, how did you get Lowe's to go along with this? Interesting development for the NFT space.
Yeah, thank you guys for having me. Very excited to talk about the project. My IRL job is product development, marketing, sourcing. I've been calling on Lowe's and other big box retailers. I've been calling on Lowe's and other big box retailers for about 18 years now. So, it was a perfect. It was a match made in heaven. Been a Bitcoin guy. going back to slightly late, but about 2020. That transition into NFTs, discovered the MFers. What really intrigued me about the project was the CC0 What really intrigued me about the project was the CC0 aspect of it, to where it's essentially public domain, Sartoshi. When he put out the project, did so in the manner where MFers can do what they want with it. So you can take it, you can put it on product. It's open to anyone to use that for whatever means they see necessary.
Okay, I have
Sorry,
to
go ahead.
ask you, does Lowe's know what MFers is like? How did this conversation happen? How did you get the flag to be sold? On the Lowe's website.
So if you go into a Lowe's store today and you garden flags. I'm actually responsible for their everyday seasonal business, right? So there's a line of communication already established there. This transitions established there. This transitions from season to season. You have your holiday winter. You go into spring, summer, so just fall, and then circles back around. So that line of communication was there. I'm always, I'm constantly having meetings with the merchant this idea to sort of test the test the theory of can Web3 help push, whether it's the marketing, the sales, the engagement. In the right direction. In the right direction. it basically took them trusting me, believe it or not, to make this thing work. The buyer himself didn't have a history. In NFTs, crypto, so to speak. So basically, I say, trust me on this one. Let's see what happens. This is a test. And I got the green light. So yeah, it was it was a lot of selling on my side, to be quite honest with you.
Yeah, so that makes total sense to me as far as how this would happen. Thank you for the additional context on that. I'm super curious about the CC0 connection here, kind of in all of this stuff. Again, like CC0 is something that's been getting trendy sort of in the world of NFTs. Sure. And basically it means that they retain, the owners retain no rights, and anybody can really do whatever they want. That seems like that's kind of a double-edged sword, though. And can you talk about how you you're thinking about the CC0 component and whether this is something that you would look to be doing. You're thinking about kind of the CC0 component and whether this is something that you would look to be doing. More in the future, perhaps with other brands?
Yes, I would say absolutely. Absolutely. From our perspective, it's more about the entire community. MFers and NFTs really as a whole from the CC0. Standpoint, right? So what we've discovered is